Good afternoon and welcome to BizTech's Midday Market Watch. Our guest today is David Koh, founder of the Smart Investor in Singapore. Great to have you on the show, David.
Thank you. Thank you, Brian. Yes, I hope you had a good day off yesterday.
Well, David, I think for markets like Singapore and Malaysia, being closed yesterday was a really good thing, especially because of the market turmoil caused by the Dow falling like 700 points or something.
Well, some people may say that it was a blessing, but for me, in some ways it was a curse because I was hoping to actually go out there and pick up some really cheap stocks, but that's the way that my mind works because I just think the market is the market and we will get these days of corrections. And it wasn't really that long ago when I was talking about corrections in general. And a correction is a 10% fall in the stock market index, the main stock market index. America only fell about 2% the previous day. And so therefore, it wasn't really that much of a shock. But in numbers terms, in actual numbers terms, when you have a look at it, 700 points does seem like a horrific number. But in percentage terms, it's not really that bad. So I was kind of hoping that the Asian markets would have been open, but unfortunately they weren't. So we, as you quite rightly said, escaped a tumultuous day.
Absolutely. Now, before we get your insights on how markets performed this morning and also a special look at Temasek, we're going to take a look at how cryptocurrencies have performed. We've got Bitcoin, which is at 30,668.6. It's up 3.37%. Ethereum is at 1,862.24. It's up 6.98%. Now, going across to regional markets, the markets that were closed yesterday, Malaysia and Singapore, the Straits Times Index is at 3,111.65. It's up 0.01%. Bursa Malaysia, the FBM KLCI is at 1,520. It's up 0.01% as well. Across the region, we've got the Nikkei, which is at 27,543. It's up 0.57%. Shanghai Composite is at 3,558. It's up 0.6%. The Hang Seng is at 27,159, which is down 0.37%, bucks the trend. And to round out the numbers, we've got the ASX 200, which is up sharply 1.17% at 7,337.10. David, your thoughts on market performance this morning?
Okay, just focus on the KLCI and look at which are the two biggest gainers on the KLCI at the moment. It is, once again, Top Glove and Hartalega. And that, I think, tells you everything that you need to know about the stock markets in general, and probably why the stock market in America dipped as much as it did on that first day of trading. People are still very concerned about the coronavirus. And I think we've seen this movie before, Brian, and that people are very worried about the coronavirus and the resurgence. And some people are talking about the fourth wave of COVID-19 and how that will affect the opening of economies, not only here in Southeast Asia, but certainly out in the West, in Europe, and also in America. You have a look at the numbers in the UK. I mean, it's north of 50,000 cases a day now, and that is because they have reopened their economies. And you can understand this balancing act that government leaders want to achieve. On the one hand, they don't want their economies to suffer. On the other hand, they don't want their people to suffer either. So what are they going to do? And in the case of UK, they've thrown caution to the wind, opened up their economies, and as a result of that, they have this rise in number of cases. So I think it's three things that are worrying people at the moment. Number one, it is the coronavirus. Number two, it is how are economies and companies going to perform when they do reopen the economies? Are we going to get this this growth in pent-up demand that people are going to be unleashing on the economy? And the third thing, of course, is inflation and interest rates. What are the central banks going to do? And I think it's really this confusing state that people find themselves in. Is there inflation? And if so, how bad is the inflation going to be? What are central banks going to do about it? How are companies going to perform? And are we going to be getting a a fourth wave of coronavirus. So there's a lot of things for investors to try and understand and try and digest in order to place their money where they think it's going to be going to grow over the long term, Brian.
Now, David, I'm going to take your point too and zoom out over to the US because earnings season is now in full swing. What are you watching out for, and what do you think the highlights have been so far?
Well, I mean, we've had a couple of, we've had quite a few results that have come in from corporations already. I own shares in PepsiCo, so I was obviously delighted when PepsiCo said sales have recovered as a result of the reopening. People are going out dining again. And so in that sense, when you have a look at a consumer goods company such as PepsiCo, it has been pretty good for the company. We'll be getting results from Coca-Cola, a peer of PepsiCo, later on this evening. And I'll be looking at those results because I own shares in PepsiCo also. And you're actually sort of seeing, well, I'm hoping that we're going to be seeing a similar kind of narrative that PepsiCo and both Coca-Cola are going to say that consumers are out there going out and buying soft drinks and snacks, and things are going to be okay. We had results from Canadian National Railway, CNI, which operates a rail service in North America. And it had results out yesterday. Second quarter earnings were almost double what they were this time last year. So there is a recovery going on, Brian. We know that there is going to be a recovery. The question is that recovery going to be sustainable? Because we are comparing with the second quarter of 2020, which was an absolutely dire period for a lot of companies. So I think that is something that people need to remember, that the results may look good, but we are comparing with a very low base of 2020. But is this recovery going to be sustainable? And if so, does it justify the kind of PE ratios that many of these companies are on at the moment? And if it can be sustained, then I think whatever correction we're going to get in the stock market is going to be fairly brief, because as I've said so many times, there is just so much cash in the market right now, which is in some respects keeping these bond prices relatively high, because there is so much demand for people who want safe investments, which is then keeping interest rates relatively low.
Now, David, I want to then take a look at a long-term investor. Now, in the Smart Investor website, you have an article that talks about Temasek, which is Singapore's sovereign wealth fund, which has chalked up an annual 8% return over 20 years. Could we talk around 5 highlights from its annual review that was out yesterday?
Sure. If you have a look at I'm not entirely sure Singapore likes Temasek to be called a sovereign wealth fund. I think they like it to be called a Singapore-based investment company. But when you have a look at Temasek, it is a long-term investor. And as a result of that period that it is investing, there will be times when Temasek will not perform, and there will be times when Temasek will perform. Last year, it didn't perform well at all, whereas this year it has. And it is that volatility that I think people need to learn from. And that is that there are going to be times when whatever you invest in, you have a look at your portfolio, it's going to have a pretty bad period. But provided you are investing in what Temasek calls trends over the long term. And that is what you need to focus on. And if you have a look at Temasek, it's pretty heavily invested in things like financials, telecommunications. I mean, these are companies that will still be around in 10, 20, 30 years time. And so you have to be a long-term investor in order to get that kind of return. Some people might say, is 8% really that great? I would say if you are able to sustain 8% over a long period of time, that is pretty good. It means that you're going to be doubling your money every 9 years. So whatever you put in today, in 9 years' time, if you put $1 in now, it's going to be worth $2 in 9 years' time. That is what an 8% return actually means. And in the case of Temasek, it is actually investing the country's money. And so it needs to be able to, over that long period of time, not go down, but actually sort of go up. And there will be periods when, like last year, it lost about 2%, and this time it's actually made it back up again. So you're looking at long-term trends rather than short-term gains.
Now, David, thank you very much for coming on the show, and thanks for your insights.
You're welcome. Thank you.
Now, we've been speaking to David Koh, the founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please like and subscribe to our Facebook and LinkedIn pages, as well as check out our website, www.biztech.asia. Thanks for tuning in.